Yes, fine. So now problem number 7. Problem number 7, the balance sheet of Alpha Limited. Till now we have discussed 6 problems on valuation of goodwill. So let us see the 7th one. So balance sheet of Alpha Limited is given below. You are required to compute the goodwill on the basis of super profit, assuming 3 years of purchase. So this is mentioned in the problem. So now let us see the asset side information. Building fixed asset, so it appears while calculating agreed value of asset. Plant and machinery, again fixed asset, it appears while calculating agreed value of asset. Then there is a investment. Investment, as of now they have not mentioned anything, so if nothing is given, we'll assume that it is a non-business asset. Whenever there is a non-business asset, it should not come while preparing net asset method. Then there is a stock. Stock is current asset, debtor current asset, cash at bank is current asset. So all other information appears as it is. Then now if you see the liability side. So liability side, here preference share capital is given. Okay. So preference share capital, while preparing the net asset method, you are going to deduct preference share capital, and you need to see whether there is any dividend is given for that. That we need to discuss. If nothing is mentioned, also you know that preference shareholder will get dividend, isn't it? So that is 50,000 into 10%. If you do, you will get a dividend amount. But while preparing net asset method, what happens? Preference share capital, arrears of preference share dividend, and redemption premium, if any, should be deducted. So here arrears they have not mentioned. That we need to see. We need to see the adjustment for that. As of now, arrears information we don't know. We know only preference share capital information. Yes, that is 50,000. Then equity share capital is given 2,50,000. Okay, so these two are shareholders fund. Then profit and loss account previous year balance, that is 30,000. Okay, that is mentioned as on 1/4/2014. Then profit for the current year. Okay, current year profit is mentioned in the problem. That is 1,70,000. So total P&L account credit balance is 2 lakhs. So this is also shareholders fund. That also doesn't come. Then creditors. There is a creditor mentioned in the liability side of the balance sheet, that is 20,000. So this is external liability. So it appears while calculating agreed value of liability. Now after discussing asset and liability side, next we need to see the adjustment. If you see the adjustment here, building is worth 3 lakh, they have mentioned. So for that we need to see the value of building once. It is given in the balance sheet as 1,50,000. So 1,50,000 is the book value. Whatever given in the adjustment is a market value, and you are going to consider market value, that is 3 lakh. Next, profit for the last 3 years have been shown in an increase of 30,000 annually. Okay, by seeing this you can easily say what is the profit for previous year. So can you tell me the profit for previous year now? Profit for the year 2015, 1,70,000. They say 30,000 increases annually. But now I want the profit for the year 2014. So can you tell me what is the profit for the year 2014 by seeing the adjustment? Yes. Answer. What is the profit for 2014? We know 2015 profit, that is 1,70,000. And there is the every year 30,000 increase. Yes, can you tell me the profit for 2014? Answer in the comment box. Yes, you can guess it, right? You can give a guess now. What is the answer? Just mention it in the chat box now. What's the answer? 2015 profit we know there is an increase in a profit by 30,000 every year. I want profit for the year 2014. Yes, Narasimha is saying 1,40,000. Okay, so what about others? See, answer is 1,40,000. Correct answer. Why? Because if 2015's profit is 1,70,000 means, of course, the previous year profit should be 1,40,000. Why? Because after increase of 30,000, it became 1,70,000 for this year. Before it was 1,40,000. So, but like this, you can do for one more year. That is 2013. 2013, 1,40,000 minus 30,000. 1,10,000 is the profit for 2013. Yes. So every year 30,000 increases. So now this is very clear. So now next, third one. In the financial year 2012-13, repair charges of 30,000 stood capitalized in the building. Okay. So if you see building value 1,50,000. 1,50,000 is a building value given in the balance sheet, and they say that 30,000 is included in that. That means what? 1,50,000 includes 30,000. Those are repair charges. And you know, profit means what? Profit means only income. Very clear. Profit means only income. Any type of expenditure you are going to deduct, any type of expenditure, whether it is for repairs, so that you are going to deduct from the profit. So here, such repair charges should be deducted. Yes, that is one more information. Next, fourth one, investment consists of 508% bond of 100 each. So now investment is a non-business asset. Very clear. Why? Because they have mentioned about bond. So they are not given what type of bond. Let us assume it is a government bond. So whenever there is a government bond, it is external. It is not related to the company's business, and it is a non-business asset investment. Whatever income you are deriving from non-business asset becomes non-business income, and that you are going to deduct from the profit. Normal rate of return is 12.5%. That is nothing but expected rate of return is mentioned in the problem. Taxation may be assumed as 40%. This also you are going to deduct 40. Why? Because we want profit after tax. We want profit after tax. Whatever given in the question, 1,70,000, it does not include tax. So we should deduct the tax from that. That is also there. So we need to see all these things, all the six adjustment we are going to see. This is our problem number 7. So let us see the solution. See this. While calculating average capital employed, preference share capital should be deducted, and while computing actual profit, preference share dividend at 10% should be deducted after making provision for taxation at 40%. So, if you see this note, you should be knowing of two methods that we have discussed in the previous chapter. What is those two methods for valuation of share? That is, one is net asset method and second one is market value method. Under market value method, if you see average annual profit, you know that is equal to actual profit. Yes. So here, what is the format for that? Market value method format AAP. AAP, that is average annual profit minus tax minus reserves. You will get profit available to all shareholder minus dividend payable to preference shareholder. This is we are talking about market value. So there is a deduction of dividend payment in the case of market value. So here they have given, see this, preference share dividend at 10 should be deducted after making the provision for taxation of 40%. That means what? Here actual profit, how we are going to calculate, it is one kind of market value method. Yes, although it is not specified in this chapter, we can directly connect that with the previous chapter. Yes, then one more thing here about net asset. Net asset method, if you know, agreed value of asset minus agreed value of liability, you will get a net asset, and from that you need to deduct preference share capital. Yes, so here under super profit method, while we are calculating, we will use capital employed. Capital employed means what? It is net asset method. So under capital employed, you are going to deduct preference share capital also. So that is very important. Yes. Why not dividend, you may ask? Why dividend is not there? Net asset means dividend also comes, right? But here there is no arrears of dividend information. That means any due, that is nothing but 2 years dividend is not given. That is not given in this question. They said only preferential capital. That means we'll assume that dividend is being paid to the shareholder regularly. That is one more thing. Yes. So now let us see in the books of Alpha Limited statement showing computation of value of goodwill. So goodwill is equal to super profit into years of purchase. Years of purchase given in the problem. Let us see where it is given. First, they have mentioned 3 years of purchase. So super profit into 3, you will get goodwill. Next, super profit formula, that is actual profit minus expected profit. You will get super profit. So first part we need to discuss now. How to calculate actual profit. Actual profit, for that profit for the year 2015 given in balance sheet liability side under profit and loss account, that is 1,70,000. This is for 2015 profit, and we know that there is a 30,000 increase every year, so we can easily calculate previous year profit. Profit for the year 2014 is 1,70,000 minus 30,000. So you will get 1,40,000, that is profit for 2014. Then similarly for 2013 also same thing, that is 2014 profit minus 30,000 again. You will get 1,10,000. So total profit of all 3 years, that is 13, 14, 15, total profit is 4,20,000. Less you are going to deduct repair charges. Why? Because it is one kind of expenses incurred for what? Here expenses incurred for betterment of building. Why? Because this type of expenditure is capital expenditure. Capital expenditure means it's a non-recurring expenditure that we have discussed. Yes, that is why less repair charges capitalized 30,000. So now final profit after deducting repair charges is 4,20,000 minus 30,000 is 3,90,000. But we want average profit. How to take average profit divided by number of years. So 3,90,000 divided by 3. If you do 1,30,000, you will get, that is average profit. Less. From this you need to deduct non-business income. Non-business income in this problem, nothing but it is interest on investment. Interest on investment is a non-business income. So how to calculate interest on investment? Just we'll see the adjustment. See this 500 into 100. Why? Because 508% bond. So rate we know 8%. So 500 into 100 you do first. So what is the answer? 500 into 100, if you do, you will get 50,000. 50,000 into 8%. So now you get interest received from that investment, that is 4,000. So now average profit minus non-business income, you will get remaining answer as 1,26,000. Now we want a profit after tax. There is tax rate given in the question. Now this is a profit before tax. 1,26,000 is a profit before tax. We want profit after tax. So less provision for taxation at 40%. On this amount take 40% tax. 1,26,000 into 40%, that is 50,400. You will get amount as 75,600. Any other adjustment? Yes. There is a preference dividend, it is to be deducted. Why? Because whatever we are doing now from here onwards, average profit onwards, it is one kind of market value method. This we have already discussed. That is why dividend payable to preference shareholder needs to be deducted. So preference share capital we know 50,000. What is the rate? Rate is given in the balance sheet, that is 10%. Yes. So 50,000 into 10% you do, you will get preferences dividend for 1 year, that is 5,000. After doing all the adjustment, you will get actual profit. Actual profit, that is 75,600 minus 5,000, that is 70,600. Yes, this is our actual profit. But super profit means actual minus expected profit. That is why we are going to calculate next step, that is expected profit. How to calculate expected profit? For that, there is a capital employed method. Capital employed, that is rate given in the adjustment. Once again, you see the adjustment, normal rate is given. That is 12.5%. That is capital employed rate, expected rate of return. So 12.5% on average capital employed. So that is nothing but net asset method. So you need to do the format, three columns, particular and two amount column. First one, market value of asset. Building, they have given it in the adjustment, write it as it is 3 lakh. Plant and machinery. What about plant and machinery? Stock, debtor, cash at bank. Let us see the balance sheet once again. See this. Here plant and machinery 2 lakh. No other information. So book value itself is a market value. Investment doesn't appear. Why? Because it's a non-business asset. Stock, debtor, cash at bank as it is. As there is no adjustment or agreed value is given, book value itself is the market value. So all the information you are going to write now here. See this: building 3 lakh, plant and machinery 2 lakh, then stock 40,000, debtor 60,000, cash at bank 20,000. So total agreed value of asset is 6 lakh 20,000. Yes. So from this you are going to deduct total liabilities. Total liability, only one information. Why? Because they have mentioned about shareholders fund. That doesn't appear. And profit and loss account, anyways, it is not there. Yes. So creditor 20,000 you need to deduct. And one more thing you need to deduct is preference share capital. Why? Because we are doing net asset method. Net asset method, there is a deduction of preference share capital. See this: CE, capital employed, is equal to net asset. So preference share capital amount, from the balance sheet, that is 50,000. So total liability is to be deducted is 70,000. That's 20,000 plus 50,000. So you will get capital employed at the end. That is asset minus liability. 6 lakh 20,000 minus 70,000. You will get 5 lakh 50,000. Yes, but we want average capital employed, so less half of current year's profit. So now you are seeing current year's profit, you should not consider this actual profit. We know that already current year's profit is given in the balance sheet. So what is that profit? See this once again. If you see here, profit for the year is specifically given. That is 1,70,000. So take that 1,70,000 and from that you are going to deduct non-business income, that is interest on investment, 4,000. How we got 4,000? That is 50,000 into 8%, that we have already calculated. So you will get our previous year profit as 1,66,000, but we want half of profit. So 1,66,000 divided by 2, if you do, you will get 83,000 as half of current year's profit. Yes, but average capital employed is equal to capital employed minus half of current year's profit. 5,50,000 minus 83,000. If you do, you will get 4,67,000. This is average capital employed. Final answer as per this format. Next, after knowing average capital employed, we can easily find out expected profit. Expected profit is equal to average capital employed into expected rate of return. So 4,67,000 into 12.5%. That is 58,375 is our expected profit. Super profit, we know the actual profit answer. Actual profit answer is 70,600. Expected profit answer is 58,375. Difference between those two answer is super profit. That is 12,225. Goodwill, super profit into years of purchase. That is 12,225 into 3. Final answer, that is 36,675 is our goodwill. Yes, this is the problem number 7. Any doubt regarding problem number 7? You can ask now. Any doubt regarding this problem number 7? You can ask. Yes, any doubt? Rajat is saying no doubt. Akamsha, Amrita, Anusha, Kushal, Narasimha, Pooja, Pramod, yes, Rajat Shifali. Shifali is saying no, Akamsha is saying no, okay. Kushal is saying, Anusha is saying no. So now let us see the next problem. I hope this concept is clear. This problem. So now next problem we'll see problem number 8. Problem number 8. Balance sheet of X Limited as on 31st March 2015 were as follows. So now there are two sides, asset side information. First thing they have mentioned about goodwill, and we are calculating valuation of goodwill. This information is irrelevant. You should not take goodwill in calculation of net asset. That is, while preparing net asset under agreed value of asset, you should not consider goodwill. Land and building. Next, that it comes fixed asset. Plant and machinery, fixed asset comes. Investment, no information given as of now. It doesn't appear. Non-business asset. Then stock, debtor, cash at bank, that is current asset. It appears. Liability side, share capital, shareholders fund, reserves and surplus, shareholders fund, creditor, external, only one information under liability that appears while calculating total value of liability, that is creditor. Yes, now after seeing this balance sheet information, so let us see the adjustment. So now adjustment profit before tax for 2014-15 amounts to 6 lakh. Okay. So 6 lakh they have given the profit for the previous year. Yes. Including 10,000 as interest on investment. So this interest on investment you need to deduct from 6 lakh. Why? Because it is non-business income. That is why. Next, however, an additional amount of 50,000 per annum shall be required to be spent for the smooth running of the business. Okay, so this 50,000, whether it is recurring or non-recurring, very important now. Whether this 50,000, this is a recurring expenditure or non-recurring expenditure. 50,000, can you tell me? Recurring or non-recurring? Smooth functioning of business means what? Yes, can you tell me whether it is recurring or non-recurring? Smooth functioning of business is equal to, we'll assume that it is a recurring expenditure. Why? Because every time you want to conduct your business smoothly, or you want to do the operation and you want to get optimum result, in that case you will occur some expenses. That is why it is recurring, frequently recurring expenses. Yes, that is 50,000 shall be required spent for smooth running of business. So this also we are going to deduct. Why? Because profit is equal to only income. Very clear. So expenses you are going to deduct. Then market value of land and building, plant and machinery are estimated to be 9 lakh and 10 lakh respectively. Yes. So this is nothing but agreed value is given. See the book value of land 3, now it is increased to 9. So there is appreciation by 6 lakh. So we are going to take agreed value 9 lakh. Then plant 8, it was book value. Now it is 10 lakh, appreciated by 2 lakh. So now again we are going to take market value, that is 10 lakh. In order to match the above figure, further depreciation to the extent of 40,000 should be taken into consideration. So, depreciation is also mentioned in this problem adjustment. So, what you are going to do, whether you are going to charge depreciation before taxation or after taxation, that we need to see. Whether depreciation is charged before taxation or after taxation. Yes, that we are going to see now. Then income tax rate may be taken at 50%. So tax rate is given as 50%. Then return on capital at the rate of 10% may be considered for normal, may be considered normal for the business. So this is nothing but expected rate of return, that is 10% is given. You are required to compute the value of goodwill on the basis of 4 years of purchase of super profit. Years of purchase is also mentioned in the problem, that is 4. So here depreciation, after deducting the tax, you are going to deduct depreciation amount. So that we are going to see now. See this solution part. First one, interest on investment should be taken as non-business income, and investment is non-business asset, that we know. Then second one, additional recurring expenses should be deducted from the current year's profit. So what is that? Additional recurring expenses, this 50,000 that we need to deduct. Then additional depreciation should be deducted from current year's profit after making taxation provision. As per the rule, additional depreciation is assumed to be not deductible for calculating the provision for taxation. So what do you mean by this last sentence? Can you tell the meaning of this last sentence now? Yes. What do you mean by this? Last sentence under third point, additional depreciation not deductible for calculating provision for taxation. That means before deducting the tax, before deducting the provision for taxation, you cannot deduct depreciation, that too additional depreciation. So depreciation, you know, there is a block of asset. Here there is a concept of block of asset. So whenever there is a block of asset, on that particular block there is a separate rate of depreciation will be mentioned, isn't it? So you know, for plant and machinery there is a separate rate, for building there is a separate rate, for motor vehicle there is a separate rate, and for computer there is a separate rate, for book there is a separate rate. So these are the concept comes under depreciation. But now we are concerned about only additional depreciation. So additional depreciation usually comes in the case of plant and machinery. Yes. So first there is a depreciation, original rate of depreciation plus specified additional rate of depreciation, that is there. But here they are directly given, no need to calculate. Directly mentioned 40,000. So that 40,000 you are going to deduct after deducting the tax. Yes. So now solution part, in the books of X Limited, statement showing the computation of value of goodwill. So goodwill is equal to super profit into years of purchase. Years of purchase given in the problem as 4. So super profit into 4, you will get goodwill. Super profit formula, you know, that is actual profit minus expected profit. So now first part is actual profit, calculation of actual profit. So you are going to do the format. See why you are going to do the format here, because there are more calculations are involved. So that is why it is better to do the 3 column, particular and 2 amount column. So first thing, whatever given in the adjustment we are going to write, that is profit for the year 2014-15 is 6 lakh. This is given in the adjustment, very clear. And 10,000 is included in this 6 lakh, that is also they have stated in the adjustment. That is why this 10,000 we are going to deduct. That is nothing but interest on investment deduction, 10,000. And next deduction is about additional recurring expenses. This also we need to minus. That is 50,000 because it's an expense. So 6 lakh minus 10,000 minus 50,000, you will get 5 lakh 40,000 as a remaining balance. After getting the remaining balance, you need to deduct tax. Why? Because this 5 lakh 40,000 is a profit before tax. We want profit after tax. So provision for taxation rate is given 50%. So less 50% on 5 lakh 40. If you do, you will get half of the amount, 2 lakh 70. So remaining balance, of course, it is same, 2 lakh 70. Less, after deducting the tax, you are going to deduct additional depreciation. This additional depreciation is given in the adjustment, that is 40,000. That you are going to deduct. So finally you will get average maintainable profit. So what you can say, average maintainable profit is nothing but Profit for the year 2014-15 after making all the adjustment. So while calculating this one, half of current year's profit, you are not going to take 6 lakh, you are going to take average maintainable profit. Why? Because this amount is obtained after making all the adjustment. Yes, so after doing this we need to do expected profit. So expected rate of return is given 10%. So you should write like this: 10% on average capital employed, because we are going to calculate average capital employed first. So you are going to do the 3 columns, particular and 2 amount column. First, you know that capital employed is equal to net asset. So market value of asset. So market value of asset, land and building and plant and machinery, it is given in the adjustment. So this agreed value you are going to write 9 lakh and 10 lakh respectively. What about stock debtor cash at bank? It is given in the balance sheet. So book value itself is the market value. So same amount you are going to write. So let us see that balance sheet again. Investment doesn't come, we know. Goodwill is not there. Yes, and all other things appears. So total agreed value of asset, that is 23 lakh after adding all these things. Plus total liability. Total liability, only one information, that is credit given in the liability side of the balance sheet. So that you need to deduct 3 lakh. So capital at the end of the year is 20 lakh. 23 lakh minus 3 lakh, you will get to 20 lakh. Yes. So now we want average capital employed. So capital employed minus half of current year's profit. So here current year's profit is nothing but average maintainable profit. We got after all the adjustment, that is 2,30,000. 2,30,000 divided by 2 or 50% if you do, you will get half of the profit. That is 1,15,000. So finally average capital employed answer 20 lakh minus 1,15,000 is 18 lakh 85,000. Yes. Next you need to calculate expected profit. Expected profit is equal to 18 lakh 85,000, that is average capital employed into expected rate of return 10%. You will get 1 lakh 88,500 as your expected profit. Super profit, you know, actual profit minus expected profit. 2 lakh 30,000 minus 1 lakh 88,500. You will get super profit as 41,500. Goodwill, super profit into years of purchase, that is why 41,500 into 4, you will get final answer goodwill as 1,66,000. So this type of problem comes for 24 marks. Sometimes they ask for 24 marks, or else it comes for 12 marks. So any doubt regarding this problem?